Whether you want to buy a car, rent an apartment, or get a credit card, one thing can make or break your chances: your credit. But what is credit, and why is it so important? Credit is a record of how well you manage borrowed money. It tells lenders whether you're likely to repay loans on time. A good credit score can save you thousands in interest and make life a lot easier. A poor score? It could mean higher rates, rejection, or even missed opportunities. But the good news? No matter where you're starting from, you can build good credit with the right steps. Let's dive in. Your credit score is a three-digit number between 300 and 850 that tells lenders how reliable you are with credit. It's based on several factors, including how often you pay bills on time, how much debt you carry, how long you've used credit, and more. A score above 700 is considered good, while anything above 750 is excellent. The higher your score, the better the interest rates you'll get on loans, credit cards, and more. Think of your score as your financial GPA. The better it is, the more opportunities you have. The first step to building credit is opening a credit account. If you're just starting out and don't qualify for a regular credit card, consider a secured credit card. This type of card requires a small deposit, usually $200 to $500, which becomes your credit limit. It's safe for lenders and a smart way to prove you can use credit responsibly. You can also explore beginner-friendly cards like student credit cards or retail store cards, which are easier to qualify for. Use the card only for small, manageable purchases like gas or groceries, and focus on paying it off in full every month. Payment history makes up the largest part of your credit score, 35%. That means every time you pay a bill on time, you're helping your credit grow. And every time you're late, even by a day, it can hurt your score for up to 7 years. That's why it's critical to never miss a payment. Set calendar reminders, enable autopay, or use mobile banking alerts to stay ahead. If you're struggling, contact your lender before missing a due date. They may offer a grace period or help you avoid a negative mark. Using credit wisely means keeping your balances low. This is called credit utilization, and it makes up around 30% of your score. Ideally, try to use less than 30% of your credit limit. So if your card has a $1,000 limit, keep your balance below $300. But for the best results, stay under 10%. High balances make it look like you're overextended, even if you pay off the full amount later. Keeping your usage low shows lenders that you manage money responsibly and don't rely too heavily on credit. Each time you apply for a credit card or loan, a hard inquiry is made on your credit report. A few inquiries aren't a big deal, but too many in a short time can lower your score and make you look risky. Aim to apply for credit only when needed, not every time you see a pre-approval offer. And avoid opening multiple new accounts at once, as this can shorten your average account age, another factor in your credit score. The longer your credit history, the better. This is why it's smart to keep your oldest credit accounts open, even if you rarely use them. Closing them can shorten your average credit age, which affects around 15% of your score. Just make sure the card doesn't have an annual fee. Keep it open, use it occasionally, and pay it off to keep building your score with age and consistency. Mistakes on credit reports happen more often than you think, and they can hurt your score. That's why it's important to check your credit report at least once a year. You're entitled to a free report from each of the 3 major credit bureaus: Experian, Equifax, and TransUnion, at annualcreditreport.com. Review the reports for accuracy. Make sure accounts listed are yours. Payment history is correct, and there are no accounts you didn't open. If you spot something wrong, file a dispute immediately to get it corrected. We started this channel with one simple goal: to make money make sense. Let's be honest, finance can feel like a foreign language. Budgeting, saving, crypto, investing, it's overwhelming. Most people were never taught how to manage money, and that's where we come in. We break it all down with fun, simple, visual videos anyone can understand. No boring lectures or fancy jargon. Just real helpful info that makes your wallet smile. So if you're ready to stop guessing and start growing, hit that subscribe button, follow us, and let's build your financial future, one smart video at a time.